Hey guys, what's up? I wanted to share with you a simple day trading scalping strategy that I started working on just using a very basic candle formation known as the hammer candle, which I'm sure most of you are familiar with. Um, Let me just share the screen here. So yeah, using a 5-minute chart, using the hammer candle, just simple way to scalp or day trade for a move, establishing your risk, your reward, and yeah, let's get to it. So this is Baba 5-minute chart, and what basically I've been looking for, and it seems to be working out well with stocks like Apple, Baba, Nvidia, anywhere you can pretty much get in and get out, very liquid. Um, Obviously, more bullish environment also works better. We're looking for the hammer at the bottom. You can play the hammer at the top as well, and for that reversal, or you can play both ways. But just for focus, we'll talk about playing it off of kind of like looking for a bottom. So over here, you see Baba today had a started down. This is pre-market stuff, but over here. But Baba started down, and then we noticed that it kind of started looking like a bottom over here. And we're looking for a hammer candle like this. And the reason why this one, let's say, versus something like this, or another one you may see is I like to see the wick kind of come down, take out some stops, and then head back up and close green. Like any other strategy, you can add studies to this. You can add moving average crossovers if you like. You can add the RSI, maybe you want in a specific range. Anything that you think you can add to tighten up a strategy, I think is always beneficial. Make it work for you. But for this, I use something pretty simple. I'm just using this hammer and paying attention to the RSI. It seems to work well when the RSI is right around the 40 range. As we see this bottoming happening, once this hammer is set, the trade is pretty simple, right? All I'm going to do is look to buy it at the top of this hammer, the break of this hammer. So let's say right about there, about 154. And the stop is going to be just below the wick of this hammer. So you have about, let's see, if you go here, let's say you got about $1 stop, you're buying at 154, your stop is 153. Another thing I noticed is the RSI was trending up this way, right? So you have the RSI trending up, you have a hammer, you have also a higher low, right? Higher low than these previous ones. So everything looks pretty good for this trade. Now, if we're risking about $1, we want to be able to get back at least $1, right, for our risk reward. So that'd be about at 155 area. You can put these lines up just to see, does it kind of coincide with some sort of support resistance levels, whatever you may have on your charts. But we're really just playing risk reward, right? So that's 1 times my risk is 155. If I look for about 156 area right here, I'd be getting 2 times my risk, and obviously 157 area, which looks like a good area as well, would be 3 times your risk. Obviously, this trade turned out really well. You didn't get stopped out. Like anything else, if you hit 1R and you want to take a little bit off, especially starting out trying to stack some wood, you might take a little bit off here, then move your stop maybe just under these candles right here, and see if you can go for 2R and potentially 3R, 3 times your risk. So over here, this trade got even more than 3 times your risk if you stayed in it, right? I'm going to switch over to Trading View, which actually one of the guys, Steve, great trader, he's been showing me more about Trading View and using some of the tools there to make something like this a lot easier. Now, I'm horrible at this, so let me see, how can I share the other screen? Which one is it? This would be this one. Okay, so this is Apple. Let's go back to Baba. So once again, this is Baba, 5-minute chart. remove this real quick. And we were looking at today. So once again, we were looking at this candle, right? This is the candle. In TradingView, they have the Fibonacci retracement, and Steve actually showed me this. He said you can change the Fibonacci retracement to pretty much lay out your risk reward right on the chart and give you your targets. So if I was going to play this, once again, I have the RSI right here, and I'm going to play this. Once I know I'm looking to get in right here, what I do is draw the line from my buy to my stop, which is right below there, about 153. And now, as you can see, I have, here's my buy, 154 level. My stop is 153, and my lines are drawn out. This is one time my risk, 155, 156, and about 157, right? So this is 3 times your risk. To add this setting, I believe all you have to do is go to settings, and no, this is not it. Hold on a second. Go to settings here and change the fib retracement. Just get rid of all of these and just change the first one to 0, to second 1, 2, 3, 4, and this is your stop loss. This is your buy, and then this is your you know, I guess you could say either 1 times your risk, 2 times, 3 times your risk. You can change the colors here if you want as well. I think what he does, he pretty much uses this, but then he'll go and he'll just take like this and just draw his lines right after. Something like that. And then kind of get rid of this, right? Move this drawing. And so it's a little cleaner as far as which levels you're trying to hit. But more importantly than any of this, you guys can figure this out, is just a simple strategy of using that hammer and looking for it on the 5-minute chart, so you can scalp, day trade, you know, and build up slowly. They go to Apple, but I know I've seen it last few days in Apple. It's been looking good. Let's see where we have hit. So, okay. All right, so right here is a perfect one. Still not great with this platform, but over here you can see, I mean, even over here is kind of, this is a red hammer, not one I would have liked to take, but you might have taken this and might have hit for 1R. I mean, just take this over here. Let's see if we pull it down. Yeah, kind of close, probably would have gotten stopped out there. And once again, that's why you have to establish where you'd want to take it, right? On this one, not only do you have a red hammer, this RSI is still trending downwards, right? As it is here on this one as well, it's still not really trending up. I mean, you got this little up pull, but it is also beating down a lot more. So you may be looking for a better reversal here. And this candle is, this hammer candle is definitely a lot nicer of a reversal candle than, let's say, one of these, or even this one, right? So if you would have taken this one here, your buy would have been right at the top of that. Once that candle forms, your stop would have been here. And you can see you would have actually used it to hit 3 times your risk right there. Actually went right to the top before it pulled back. Looks like we have another one right here. That was the next day. Let's remove this drawing right here again. So you got Apple running up. And now we have a little bit of a pullback here. Continues to pull, and you have this nice hammer. See, the wick is about double the body. Same here, wick is more than double the body with the green close. Once this candle forms, you're looking to get in on the break of that, right? So your buy would be in about 147.36, and your stop is about 147.08. So now this is really tight, right? You're looking at 30 cents here. So once again, that's why I'm saying you can use this for scalp, day trade. So this is something you might go heavy. I mean, if you're buying shares, depending on your risk reward, or if you're risking, let's say, $150, $200 a trade, you're buying several hundred shares here just for this move. But with that, you can make 300-400 in a matter of a few minutes, right? Or if you're going to use options, you can use, let's say, like the weekly, maybe one leg out of the money, It's just harder to use stops with options, especially with weeklies. So most of the time, it's better just, if you're going to do that, something like that, probably do like a lotto, where you just keep your risk small, and then you look to get out at those targets. But yeah, this is something that I see is a good strategy. Like anything else, not going to work all the time, but stops do work. So if your stop gets hit, you get stopped out. Get out of the trade, because you're only losing one time your risk. On that next trade, if you hit 3 times your risk or 4 times your risk, or even 2 times your risk, you'll have to lose 2, 3 trades and still only hit 1 trade, and you'll still be able to be profitable, right? So stops work only if you use them. But anyway, hope you guys like this and can use it to your advantage. Let me know what you think. Take care.